Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. And today for our viewers, we'll decode, and it is more importantly for parents as well watching the show, about NPS Vatsalya. This was recently launched by the government, and we are trying to understand on the show if that makes sense for investing for a kid's future, or should they go with the regular route of mutual funds? The differentiation between the two, the return profile, and what makes more sense. To discuss this, I have with me Mrin Agarwal, Financial Educator and Director at Finsafe India. Mrin, good afternoon. Thank you so much for joining in as always. NPS is one scheme. We have spoken about it a lot more than NPS Vatsalya, of course, because it's recently introduced. So let's start with the basics. What are some of the most important features of NPS Vatsalya that one should keep in mind? How is it different from normal NPS? And some basics here.
Good afternoon, Sonal, and as always, it's a pleasure to be here today. So NPS Vatsalya, the main difference is that this is a scheme for minors. So NPS, you can start from the age of 18, but NPS Vatsalya can be started below 18, any age, even as soon as a child is born, you can start NPS Vatsalya. It is, of course, a long-term savings scheme. Minimum being 1,000 rupees per year. And like NPS, you have various investment options that you can go for. So you have the active choice where you can go up to 75% in equities, or if you want to choose bonds, you can do 100% bonds. If you're not sure what percentage split to do between debt and equity, you can look at doing the auto choice, and within the auto choice you have conservative, moderate and aggressive, the default option being the moderate option, which basically has a 50% exposure to equity, right? So this is about the investment options. Now, very importantly, how does the withdrawal work in the long term, right? So at the age of 18, you have two options, right? One, you transition this into a regular NPS account. Now, what is a regular NPS account? It goes on till the age of 60. And at the age of 60, you can withdraw 60% as a lump sum or over a period of time, and 40% goes into an annuity. So either you transition this into a regular NPS account once the child becomes an adult, or the other option that you have is that you can withdraw 20% of the accumulated corpus as a lump sum, and the balance 80% needs to be moved into an annuity scheme, which is going to give a regular income in the form of pension through life, right? So this is what you can do at the age of 18. Now, apart from this, if there is a requirement before 18 for money, let's say towards education, for example, then you are allowed to withdraw up to 25% of the contribution and not the corpus. Okay, but you can withdraw it only after 3 years, and you can do maximum 3 such withdrawals. So net, the main difference between NPS Vatsalya and NPS is really that this is a scheme where you can open the account for children, save for them till the age of 18, and then really decide whether you want to move to the full NPS or you want to do a withdrawal.
Okay, so that is the primer, just to understand what the basics are about NPS Vatsalya. The next question, of course, is should all parents go in for it?
So I think you have to be very clear about how you want to use this scheme, given that there is a restriction on the withdrawal, and you cannot get the 100% amount back at the age of 18. So a parent should really decide what they want to use the scheme for. If it is for funding child education, I think the scheme is going to fall short. But if, for example, a parent wants that we want to set up something for the child where they are going to get regular income through life. There could be cases, where, you have mentally challenged children, for example, and even otherwise as well. If you want that the child should get a regular income through life, then you can look at a scheme like this. I feel it's a bit much for parents to be thinking about retirement for the children. But yes, if these are some of the things that you have in mind, like, you want the child to get a regular income, then you can certainly look at the scheme, but be mindful, or you might just want to wait for some time till the tax treatment on NPS Vatsalya is known, because I think the circular is yet to be issued on that front.
Okay, you're right. It's sometimes quite early, right? If your kid is 5, maybe you're thinking of your own retirement, not really the kid's retirement at that point. But when it comes to investing for kids, what makes more sense, NPS Vatsalya or mutual funds? What are the major differences between the two when it comes to returns?
So, given that we don't know the taxation on NPS Vatsalya, but even if we keep in mind the taxation that's there on regular NPS, for example, right? I would still say that mutual funds are a better option because one, equity mutual funds specifically held above a year are only taxed at 12.5%. Also, mutual funds are extremely flexible where the withdrawal is concerned. So post the exit load, of course, you can exit the mutual fund whenever you want to. Again, when you look at returns, for example, I think returns are going to be pretty similar. So when I looked at the NPS portfolios, you would find them to have a good amount of large cap stocks and some amount of mid cap. So I think the returns are going to be pretty much in line with like a large and a mid cap fund, for example. So again, I think, when you're making this choice of NPS Vatsalya versus mutual funds, it's not about the returns, it's more about the usage of the funds, like how do you want to utilize the corpus that is really being built and what is more important to you. Just to give you an example, for example, if a parent is investing 10,000 rupees and let's say the child is 5 years old, and the parent is investing 10,000 rupees for the next 13 years, thinking that I will use this for education, right? Now, let us assume that they have done an equity fund and we've assumed a 12% return on this investment. So in the next 13 years, by the time the child turns 18, the value of the investment will be somewhere around 38 lakhs, right? Now, with a mutual fund, you can withdraw that entire amount and utilize it for the education. But in NPS, since only 20% of that amount is going to be accessible, it really means that you'll only have 7.5 lakhs for withdrawal, right? So what I would say is that, again, I would just reiterate, it's not about the returns. It's really about how do you want to utilize the corpus that is being built.
Okay, that makes sense. If you want that money at the age of 18, you would just get 20% of it. But if you want most of it for education, because that's when the higher education costs really come up, you would go for mutual funds because the entire corpus would be available for you. That's about overall aspect of mutual funds versus NPS Vatsalya. Say for a girl child, should a parent go for both NPS Vatsalya and Sukanya Samriddhi scheme and also some portion with mutual funds? How would that math work out?
Okay, so when you look at Sukanya Samriddhi on its own, it's a great investment, right? 7.65% tax-free, risk-free return. Now, just to take a step back to understand the working of Sukanya Samriddhi, right? So you can open the account till the time the child is 10 years old, and it matures 21 years from the date of opening, not at the age of 21. So a lot of people get confused about this point. Now, in Sukanya Samriddhi, at the age of 18, you can only withdraw 50% of the accumulated corpus, right? So, one, I would always say that Sukanya Samriddhi is meant for more conservative investors who want a fixed return, right? Again, it depends upon what is the goal that you're funding for. So let's take education and marriage separately. So for example, again, let's assume the same goal where the child is 5 years of age and the goal amount is, let's say, 50 lakhs. When we take into account inflation, the value of this goal is going to be 1 crore by the time the child turns 18, right? Now, in order to reach this goal, and if we assume the same 12% return, the investor needs to be investing 28,000 rupees per month. Now, let us say the investor decides that I don't want to put this entire 28,000 towards equities. I want to maybe do 50-50, right? So obviously what's going to happen is that the returns are going to be lesser because you're going to average between the 12% and the 7.65%, which is roughly about 9.8%. And so the overall corpus that you're going to end up with is about 70
We have
lakh.
more questions. Okay. Okay, all right. So that is what it would look like if we go for mutual funds and Sukanya Samriddhi scheme together, or otherwise individually as well. Mrin, we have some more questions on this, so let's take a quick break for now. But on the other side, we'll continue our discussion with Mrin Agarwal of Finsafe India on how NPS Vatsalya is as an investment option. Welcome back. You're still tuned into MF Corner. We still have with us Mrin Agarwal of Finsafe India. We're discussing NPS Vatsalya. How is that an investment option versus mutual funds? We discussed the difference between the two. But if someone has to go and put PPF in the picture as well, how does it compare with that, Mrin?
Yeah, I don't think PPF is really an option, given that it's 7.1%. See, the return on its own is a great return, considering that it's tax-free. But again, the fact remains that when we are trying to beat the 7% inflation, then you need instruments that can beat the inflation well.
Okay, that makes sense. So, the next leg of question would be, does it make sense to plan for kids' retirement so early? I don't think you agree with that. But is it not better to invest in solution-oriented mutual funds which focus just on a particular problem or a particular goal?
So when you look at the solution-oriented mutual funds, what they essentially do is that they come with a 5-year lock-in, and they're specifically meant to help you save for a particular financial goal. One of the concerns that I have with the category is, of course, there are different funds which have different allocation to equity and debt within the category. So some of them are run like balance funds. Some of them work like 75% equity, 25% debt. So even then, but when you look at an overall category average, what I find is that there is some underperformance even when compared to a simple balanced fund, right? So what I feel is that, for somebody who wants to save for the child, whatever the goal might be. And if you are actually considering mutual funds, just the regular schemes that are there, like, for example, a Nifty 50 equity index fund or a flexi cap fund would be a good option. Again, because what I typically find is that people find it very difficult to figure out which scheme to go for, because, each one of them comes with a different allocation to debt and equity, right? So I think, the easier thing is just to buy a simple Nifty 50 index fund in the child's name and just keep it for the long term.
Okay, that makes sense. Mrin, always a pleasure speaking with you. Thank you so much for joining in today with your take on this particular topic, which is very topical as well. So hope to be speaking to you very soon.
Thank you.
Okay, that's all that we have on this topic. But after the break, we'll discuss the pros and cons of investing in property for rental income, compare it with mutual funds. Preeti Rathi Gupta from Lakshmi will be joining in now. So please stay tuned for that conversation.